Well, good morning, everyone. Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's the last day of July. August is almost here. I'm thinking it's February, March. August is almost here. Go figure. Anyways, I hope everybody's having a wonderful summer. Welcome back. It's Monday. Now, the market's not going to gear up to open up for another hour and 37 minutes, but I've got a lot to talk about. Now, folks, I want to make sure you stay till the end. First of all, I want you to like the YouTube Wealth Press channel where we post these videos. I want you to like this video and, most importantly, subscribe to my Telegram channel. And here's the thing. I've opened up my VIP room for the summer for the public. It's happening today at noon Eastern time. You could find the link above or below this video. And if you watch this video till the end, and if you post me some nice comments, I'll also give you 2 day trading stocks that could potentially double in price by the end of day today, okay? Small cap day trading stocks. So you don't want to go anywhere. Let's get into this right now. So as you can see here, the market's opening up about 13 points higher on the Nasdaq, about 42 points on the Dow, and the S&P is meeting us in between. There's just not much volatility starting off the week. Now, I'm expecting a lot of volatility this week because we still have a lot of earnings on the agenda. So I'm going to send this to you via email. I'm going to send this to you via Telegram, and I'm going to send this to you via text. But this is all of the major earnings and what's the expectations for the week. I did this nice and early for you today. You're welcome. It's all here. You could see everything that's coming out this week. Now, what are the major concerns? Last week was the big week. I mean, this is going to be the second biggest week. After this week, it's going to be very nimble. You could see here, we've got a lot of big stocks coming out, a lot. Now, what's the biggest impactful reports of the week? Well, you've got AMD coming out tomorrow. They're looking at down 50% year over year on EPS, 50%, and revenue down 26%. I think they're going to beat those numbers. That's coming out tomorrow. And before then, you've got, I mean, look at all these stocks. I mean, just to give you some perspective. Avalon Base coming out, Blink Charging, smaller stocks, but still big stocks. And then, just when you think everything, Electric Arts, ETN, Devon Energy, I mean, big stocks. But then when you think everything is over, you got Marriott, Match, I mean, you name it. It's Pfizer, Sirius Radio, Starbucks, S&P stock right there, Uber. But here's the big one. It is called Amazon, and it's coming your way on Thursday. And also Apple. This is the big one. So you're gonna have some volatility tomorrow for sure. I mean, all this week we're gonna have higher volatility, but I'm expecting Apple and I'm expecting Amazon to be the big shaker and baker, and that's coming out this Thursday, and that's going to be the end of the FANG stocks. And then you're going to have the mid caps and small caps, but you could see here on Friday. It's definitely cooling off already. So we may have some more opportunities this week. Last week, every stock I pointed out to Matt, earnings, 9 out of 10. This week will probably be 50%, so we'll be able to get some trades on finally, thank God. But again, Qantas coming out with earnings. Again, all of the stocks, our favorite stocks, they're all coming out with earnings. But you got to be careful. You got to watch out for Apple and Amazon. Apple's expected to be down 10% for the year. And Amazon is expected to show per share profit of 32 cents per share versus a loss of 20 cents per share in the year prior. That'll be very interesting. So Amazon's supposedly doing well. Apple is down about 10%. I think both stocks are going to do better than expected. So far, the FANGs, the only one that hasn't done well was Microsoft, and it's still holding on. So aside from that, I have another little gift for you today. The implied volatility for the biggest stocks, the expected move after earnings for the biggest stocks that are reporting, including Amazon and Apple and Budweiser and Coin. So here's the biggest stocks that are reporting. So today you got Sophie and ANET. Tomorrow, AMD, Pfizer, Starbucks, Caterpillar, Merck, the cruise liners, Uber, Devon Energy. So you could see the biggest ones. So I took 2 things. I gave you all the big cap earnings that are coming out, all the earnings that are coming out this week. And then I gave you the biggest ones with their implied volatility, with what their expected volatility range when they announce earnings. So we'll take a look at these in the VIP room today as we do the second part of this video at noon Eastern time. Don't miss out. You could find the link above or below this video. Bond market. I think the bond market has bottomed out for the time being. I think this low is going to hold. We're really oversold here. I mean, every time we come down here, we tend to bounce. Now, do I think bonds are going to go lower? I actually do. But I think before they go lower, they're going to go a little higher. I think the worst of the worst is already priced in. We've had the GDP. We have the FOMC. We had the Fed speakers. There's really no major opinions on the bond market right now. And the fact that they're holding on to this low, I should probably put this down here, is a pretty good sign. And that's a substantial low. We've already had 2 days above it. I think we're going to go back to the 102 level and then possibly to the 104 level. But let's get to the 102 level first, okay? Let's talk a little bit about the economy, what we can expect this week, and then I'll talk about sectors. More corporate earnings results will be looked ahead of Friday's non-farm payroll report. That's the biggest report this week. As you can see, there's a lot of reports this week, but not a lot of major ones. This is the major one. You've got jobless claims, which has been a nothing burger, factory orders. You've got ISM manufacturing, construction spending, and JOLTS, obviously. But the big focus this week is clearly going to be on earnings, okay? Data from U.S. Department of Commerce showed that U.S. core PCE prices were slightly lower. Employment cost index was slightly lower. Consumer sentiment was slightly lower, but I mean, these were not the biggest drivers. We've had plenty of drivers last week. Basically, economy is doing okay. They're thinking better than a soft landing right now. Matter of fact, Minneapolis Fed President Kashkari said on Sunday, I mean, doesn't he have anything better to do on Sunday than talk about inflation? He said that the inflation outlook in the U.S. is quite positive, but he also acknowledged that the central bank's aggressive tightening would likely cause job losses and slower economic growth. Citigroup raised its year-end target for the S&P by 15% to 4,600. 4,600 was a big number that Goldman was also looking at, amid a higher probability of a soft landing. Nobody's talking about a hard landing anymore. Everybody's talking about that there's a chance we might not even have a soft landing. But I think we are in a soft landing right now. Earnings this week: Apple, Amazon, Merck, Pfizer, AMD, starting off with AMD actually, Caterpillar, Starbucks, Qualcomm. What's not reporting earnings this week? Hopefully, we'll be able to trade some stocks that had earnings last week. I mean, it's been a mess. Not because we haven't wanted to give you guys trades, but because there's earnings like crazy coming out. Today, we're looking at the Chicago PMI. It's coming out in 9:45 in just a couple of hours. Not a major report. Again, I think earnings are going to be driving the market and bonds because bonds look like they've bottomed out. Europe. They're digesting the Eurozone growth and inflation data. Food and beverage stocks underperformed. Mining and healthcare gained ground. Mining and healthcare is defensive, just so you know. And food and beverage is also kind of defensive. So it's a little odd, but here we are. China closed higher. Optimism over additional stimulus measures. Yay! Measures overweighted concerns about further deterioration of business activity. Official survey showed on Monday that manufacturing activity declined for the fourth consecutive month. That's bad for America and U.S. stocks that rely on China, and gambling stocks too. The services and construction sector were on the verge of contraction, posing a threat to growth prospects for the third quarter. China is not doing well right now, and Japan closed higher amid a 4-week high today, driven by Bank of Japan's announcement of unscheduled bond purchase operations, containing the sell-off triggered by its decision to allow yields to rise above 0.50. They're very careful, but I think they're going to loosen things up a bit. Now, as far as sectors, now I want to show you something interesting. If you look at the last 7 days, this is the last 7 days. Communications, technology, energy, basic materials, S&P 500, consumer discretionary technology. Look at technology, consumer discretionary, communication services. QQQ, communication, consumer discretionary, technology, all in the upper end. And what's been lagging? Financial, healthcare, real estate, and financial. That's over the last week. Over the last 3 weeks, the Russell has been leading, energy has been leading, and communication has been starting to come up, but it's been much more blue chip heavy. And technology has been here. Technology has been here on the lower end in the last 3 weeks. In the last 6 weeks, technology has been almost all the way down. So it looks like over the last week, it has reversed course, and now it looks like technology is starting to come back. But at the same time, energy, basic materials, and the blue chips are still strong. That means that we could have a pretty broad rally this week in the market because look Look at it over the last look at it over the last 6 weeks. Energy, communication services, very, very broad. Financial, Russell 2000. Again, I'm not sure that technology is going to be able to rally, but last week, if the earnings are good for tech this week, communication and QQQ and consumer discretionary and technology can rally again. So last week, technology came back roaring, rocking and rolling. It'll be interesting if they come rocking and rolling again, or they're going to start declining. But right now, it's a very mixed market because you're seeing, over the last 3 weeks, you've been seeing communication services, QQQ, energy, basic materials, and consumer discretionary. So it's been a very, very mixed market, which is not a bad thing, okay? It's not a bad thing. Broadly speaking, if you look at the QQQ right now, it's looking good. It looks like it wants to go higher again. It's making higher lows. So it's looking pretty bullish from where I'm sitting right now because, as I said, it's not just large cap tech. It's the broad markets coming into all of this. Look at the Dow. Dow's not looking bad right now. It's looking like it's consolidating, not ready to come down. And the SPY is looking pretty good too. So again, things are not looking that bad right now technically. And also, as I said, the bond market looks like it could be bottoming out around this current range. And again, I want to see it go up to the 102 level. This is the TLT. It's an ETF that I track bonds. If you look at bonds, you could. I'm looking for about 2 basis points if you're looking at futures here. But that's what I'm expecting this week. So keep your eye on the technology. It's going to be a very interesting week to see whether we make it or break it out of it or not. Now, and also semiconductors look like they're ready to make another high. So again, AMD earnings are tomorrow. That's going to set the tone for the rest of the week. All right. So we'll see. We will see how things go. Now, I promised to give you guys a couple of small caps before I end the session. Here they are. ALLR. The stock is up 26% pre-open. It's already up right up here, and this can rally. Now, it had some news. Law firm. They hired a law firm to investigate on behalf of investors. So investors for this company hired a law firm. So that's pretty positive news. It looks like something bad happened and they're going to be suing somebody. But they're up 27%, and stocks that are up 27%, highest movers at pre-open tend to really move. The second one is CHNR, and they're going to sell space technology. So again, very, very important. The stock is up 51% pre-open. I know these are small caps, but they could move the first hour of the day. Look at where this baby is right now, 51%. These are stocks that move the first hour of the day. After that, they could move in towards the end of the day, but typically at the last hour of the day. Folks, I've been trading for almost 3 decades. In January, it'll be 30 years. And in that time, I've seen a lot of different trading strategies come and go. But one strategy that's consistently outperformed the market is called the M spike. That's what I call it. The M spike is very unique. It's a very unique pattern that can be found on any chart, and it's a sign that a stock is about to make a big, big move. I'm hosting a free boot camp tomorrow, Tuesday, 10 a.m. Eastern Time. I'll give you an earnings preview too. And it's going to be amazing, and I'm going to expose this pattern to traders for the first time. Check it out. Follow the link below. 10 a.m. on Tuesday, 10 a.m. Eastern Time, nice and early in the morning. You don't want to miss out. I'll see you there. And remember, follow the link, join our YouTube channel, join our Telegram channel, and you could find the link for my VIP room there. It's happening at noon today. Bye, everyone. Have a great day.